Now I'll ask one of our citizens to present their story. This is Steve Pittman. He lives on Grange Hall Road in Greene County. Mr. Pittman.
Yes, well, my name is Steve Pittman, and I live in Beaver Creek at 1492 Grange Hall Road. My home for 30 years and where I've raised my family. I first purchased my home in 1979 for $49,500. The house now sits next to a bike path, but at one time when my daughter was younger, it was a railroad corridor. We used to run out and greet with the engineers, train engineers, as the trains would come to a stop on their way up towards Xenia, not being able to get up the hill with a single engine. I fell behind 2 payments on my mortgage after getting laid off from Time Warner Cable. So I called Wells Fargo. They placed me on a forbearance plan where I paid a higher monthly payment to catch up for 3 months, and then was told that I would be eligible for a loan modification. I made those payments faithfully and on time. They told me that a modification had been approved after calling them after the 3 months, and added that my temporary fixed anniversary date for my loan was up, and my loan was going to be readjusted from 6.75% to 9.75%. The Wells Fargo representative told me that the loan modification was in process and that it would be mailed to me for signatures. Well, he stated further that my first payment wouldn't be due for 3 months. Well, I never received any of the paperwork, and the representative could no longer be reached. I kept calling until finally a new representative was assigned, and again we made arrangements over the phone. The day after speaking with the new representative, the sheriff showed up at my door with foreclosure papers. In trouble, I contacted the Save Your Dream Foundation here in Dayton, and they assigned me with an attorney here for the Advocates for Basic Legal Equality. Since then, many promises have been made by Wells Fargo, but none of them kept. I've been denied a loan modification, even as Wells Fargo has signed up for the Home Affordable Modification Program, or HAMP. Between the time that I first called my lender and now, the interest, foreclosure costs, and other expenses, some of which have not been explained, have inflated the balance with additional charges that have consumed all equity that I had in my home. I have a good job now, working for DirecTV, and I've proven that I can afford my mortgage. They still say no. In fact, 5 times they've said no. I've written to our congressman, I've written to the White House, and that's why I'm here tonight. I do not know where to turn next, but I do know that I'm not going to leave my home at 1492 Grange Hall Road. Thank you.
Thank you, Mr. Pittman. We all appreciate your candor and willingness to tell such a difficult story. It helps the rest of us understand what happens to people who get caught up in this crisis. Emily McCord of WYSO will ask the first question of our panel as a follow-up to Mr. Pittman's story. Emily?
Obviously, in Mr. Pittman's case, there's a lot of different issues going on right now, but I would like to direct my first question to Mr. Faith. He's in a situation where he is trying to get himself back on his feet, and he's trying to modify his loan, but at the same time, this foreclosure process is still going on, and his debts are mounting up from it. I understand there's a bill in the House right now that's aiming to put a moratorium on foreclosures for a 6-month period. And Mr. Faith, I'd like to ask you, what is House Bill 3? How will it help people like Mr. Pittman, and who's supporting the bill?
Well, it's a great question, and I'll tell you, what Mr. Pittman is experiencing is being experienced by thousands of people in our state today. And that is, their loans ended up with a mortgage servicer. It's not the bank you went to when you originally got your loan. It was sold off, ended up, and Wells Fargo is one of the big ones, but there's many other big national players that are servicers. They actually are paid to do 2 things, and really only 2 things: collect payments and foreclose. They don't have a financial incentive to do the loan modification that Mr. Pittman needs. And there's a disconnect between how they're incentivized and what the homeowners need to remain in their homes. And even in Mr. Pittman's case, where he could afford a reasonable payment, you know, that's what he needs. He needs a loan modification. So one of the things that House Bill 3 that's currently pending in the legislature would do would be to regulate these servicers. They're essentially unregulated by anyone at this point, not at the federal level and certainly not at the state level. Many other states have passed regulation on servicers, and they hold them to account when it comes to working diligently with homeowners where it's viable. We're not asking them to perform miracles, but where it's viable, they should do loan workouts and modifications with homeowners. Regulating servicers and putting them under more scrutiny by through a government agency would help to achieve what Mr. Pittman needs in the long run. The other things the bill would do would be to help provide funding by putting a fee on the servicer to file the foreclosure. So it provides a disincentive to file, but that funding would be used to help fund foreclosure prevention counseling, you know, organizations that are providing legal assistance like ABLE, other groups that will help homeowners such as the Miami Valley Fair Housing Center, County Corps program. Others could benefit from the funding that's derived from the fee. So it accomplishes two things: a bit of a different disincentive and provides needed funding. The other thing we have to realize is that foreclosures cost us all. It doesn't just cost people like Mr. Pittman. I mean, it costs everybody because property values decline when foreclosures occur. In fact, there's been research that shows on an average foreclosure, home values by the neighbors go down $3,000. And our values are declining as a state. We're now, I think in the last 12 months, we've seen about a 6% decline in our property values. So that's causing many other homeowners to get close to or actually underwater with their mortgage, meaning they own more on their home than their home is worth. That now affects 1.1 million Ohio mortgage holders. This is a big problem, and it costs everybody. I know Dan can tell you what it costs county government, what it costs local government to deal with boarded up houses and all the crime and vandalism that occurs when properties are left vacant. So House Bill 3 is a common sense solution that's already cleared the Ohio House and is currently pending in the Senate. It's been pending in the Senate for months. They've yet to hold one hearing on the bill. So we're pushing for stronger action once the legislature reconvenes after Labor Day.
Well, thank you, Bill Faith of the Coalition on Homelessness and Housing in Ohio.